Good morning, everyone. It is Monday, July 31st, last day of the month. I think it's a pretty mixed month as far as trading performance goes. I think some guys are probably going to be up, some are down, depending on what what their mix is and everything. But yeah, it's nice and getting nice and cool in New York now after the hottest, I think, July in the history of the world. The hottest month in the history on record, which I don't know, what is that, 100, 200 years maybe. But now it's getting cool. So yeah, Jerry, how are you?
I'm well. Just got back from New York and hung up there, went to Beyonce and had fun there. It was a really good, it was a good husband accompanying my wife and friends to Beyonce. I don't know if I told you this, but my Apple Watch gave me warning signs of the decibels being too high
Oh my.
multiple times, over 100 dBs or whatever. And I took a picture of it. And yeah, and my chest was thumping.
Well, were you close?
I've never,
I imagine you were close.
no, not that close. I couldn't really see her on the stage too closely. I mean, I had to watch the video monitors. And
Oh wow. Okay.
then I told my friends, I'm like, the military has a weapon that creates that kind of loud sound. I think it just debilitates people and they just like fall down and where they're standing and they're like, please stop or kill me. I'd rather die than. And so if it's kind of very uncomfortable at 100, I'm sure the military produces like 200, 300, and you just got to just lie down and hope it goes away. So that would be a good
Yeah.
stock for us to.
Oh God. Here we go. Yep.
I love the
Yeah.
military stocks, as you know.
I know. Well, at my place down Jersey Shore, there's a munitions field close by. There's an air base, and then there's a munitions field where they drop bombs. And it sounds like randomly, you never know when they're going to do their practice runs, but you'll hear it almost sounds like a dump truck hitting like a pothole, like close by, where it really shakes the building you're in. It's like that loud boom, but these bombs are 5, 6 miles away, and you're getting that sound, as if it was a dump truck around the corner. And but I think I always see fighter jets flying up and down the beach. But I think this weekend I believe I saw an A-10. Do you know what an A-10 is?
No.
Oh boy, yeah, an A-10. I think it's an A-10 Warthog. Um, it is a just a badass plane, and I think they have maybe a 30 millimeter cannon on the front, and it makes this like sound, and that's it. And once you hear that, you're already dead. Um, but I think it shoots like 1,000 rounds, like it's like 1,000 rounds every like 2 seconds, or something insane. Um,
Hmm.
and I've asked my cousin about it, who's a fighter pilot, and he says, "Oh yeah, whenever that shows up, it's what we call pink. It's pink mist. When it hits bodies, you just vaporize. There's nothing left. It just turns into mist. Um, so seeing one of those is pretty cool, but yeah, I don't know about that sound weapon. Um,
Yeah.
that
Yeah.
sounds
Look it
uh,
up.
that sounds new.
Sounds
Uh,
intense. Yeah. Then you probably saw yesterday in the paper that Taylor Swift concert in Seattle shook the ground so hard it registered a signal on a nearby seismometer, roughly equivalent to a magnitude 2.3 earthquake.
that
Yeah,
yeah, that
so
can't be
there's a
good.
lot of
Can't be good for your ears, no doubt.
no,
No way.
yeah, yeah. No, my ears were sort of foggy for a while after that.
Yeah, I think it's best
So
to invest in earplugs, even like sporting events too. Just get like just throw some earplugs in. Like you'll be able still be able to hear, but it won't you won't be ringing for a day or half a day or something. Going to bed where it's just you're still ringing all night. I've had that. That's not fun. Um,
no, exactly. That's exactly what I should have done. I wasn't prepared. Didn't know that she would go that far,
she rocks, man. She's
noise
she's
wise.
top. She's one of the best.
She is.
Um,
Oh, yeah.
so I haven't been keeping up too much with the conversation on Twitter recently, but as you've told me, as I understand, you've been getting hit pretty hard from the crowd.
Oh no, I mean, it's just kind of funny. Nothing I can't handle. There was one paper we talked about on Spaces on Friday where the authors they said letting winners run and cutting losers short doesn't work. They were talking about stocks, individual stocks, and they said basically it's better to let losers run and winners and losers run. So it's kind of funny. I don't think it was done by a CTA, who's the typical kind of back test with the full complement and stop losses and trading stops and things like that. But just kind of funny that's out there. And a lot of the buy and hold crowd promote things like that. That's where I first saw it. Worst advice ever: let your profits run, take small losses. The trades you'll miss out. Blah blah blah. And so this guy who put that on his Twitter, he sent out the link as well. So that was kind of interesting. And then I caught some crap because of the way I was just anecdotally saying, people are always asking me, how do you choose stocks to trade? There's so many of them. How do you go about it? And I say I go about it the same way as I do the futures, currencies, commodities, and interest rates, and that is try to trade all the liquid ones and have kind of a balance. I think, each sector should be sort of weighted to the degree that it offers diversification. So if it's highly diversified, then you trade more. So we trade about the same amount of commodities as we do interest rates, maybe, or a few more commodities than interest rates. There's more commodities in bond markets. And then we trade a few, maybe a bit more of those than in the currency markets because there's all kinds of currencies out there. And so we trade more of our portfolios in stocks because there's thousands of them and we don't want to trade, you know, but to the degree we get diversification in those stocks, so we trade about half stocks because we can get a lot of diversification in stocks, more than any other sector. That's my point. And then I
hmm
also made this cardinal sin. Oh my God, you won't believe what I said. And this got people riled up. One guy in
Uh,
particular, he got riled up because I said, I like to have fun with it. I like to have fun. So I throw in Dunkin' Donut and Formula One. Obviously, very reasonable choices. They're not really large companies. Could act like an index almost. They could have some outliers. They're diversifying for sure.
sure.
And I sort of said, I just mentioned the word, let's have some fun with this. And when you scroll down the list of stocks, you smile a bit. And that was me using emotion. That was an emotional response. I shouldn't do that. But I think it's interesting to go over why we trade stocks to begin with. Why do we trade single stocks versus indices? I don't trade indices. And and how do we choose them? Yeah. So why don't you start? I think you do trade single stocks, and why do you trade them, and how do you go about choosing them? I don't think I've ever heard your explanation in depth.
Oh,
You don't
well,
copy me, do you?
no, I don't
You don't
copy you.
copy my stocks, do you?
No, I don't. Um,
Okay, good. Well,
and
I wouldn't be
it,
surprised. I would say thank you for the compliment.
well, I don't. If we have some overlap, I think there's probably a handful of stocks that because you trade more than I do. Um, in terms of quantity of single stocks than I do. So I think there's a few that we overlap on, but it's not. No. But I, yeah, I hold the notion that similar to futures, I want individual representation of equity, really just equities in general. I don't want someone else to do the work for me in terms of an index future, something like that, or an ETF, something like that, and then trade that because one, I don't I, I don't want to trade someone else's system, and all I think likelihood if it's an index or it's some ETF that's copying an index or something like that, it definitely has some trend, momentum, holding on to winners, um, not exactly to what we do, but it has some of that philosophy and strategy in it. So okay, I don't want to trade that. Um, I want to trade these things themselves. So, and I know that if I can, uh, if I can get some large caps, if I get some smalls, I can get some tech, I can get some energy, I can get some other wacky, new, leave the door open for new um, industries like AI and 3D printing and other clean energy and other wacky things that are coming on, that are gaining traction. Um, because think about it, if I was like, and I do this a lot in my own head all the time, if we went back to the 1700s, we wouldn't have any energy. We wouldn't have any oil stocks because they didn't find oil then. They found it in the 1800s. So it became a new industry. So I always want to leave the door open for things like that. And I know you do as well. And so, yeah, I just kind of have an assortment of different sectors, an assortment of different um, market capitalization stocks. They always have to meet the volume, the average volume, and say the price. I want them to be legit stocks. I don't want them to be these, you know, uh, SPACs or something. I don't even know if SPAC is the correct, I don't, if it's correct to bash them, but just things that are just, they're not here for the long run. They're like penny stock like things where they're not real companies. I want them to be real companies with real industries, and yeah, uh, and they're actually traded. They've gained traction already. So, uh, yeah, I'd rather trade these things myself, and I believe that my style of trading is going to be able to capture their moves in a more profitable way than say someone wrapping them into an index with 500 other names or 100 other names. And
Right. I don't think I never thought it was very legit. I just don't see how you can trend follow 500 names. You don't trend follow a commodity index. Nobody wants to trend follow a currency index.
no,
We're long some currencies and we short some currencies. We're
yeah,
long some commodities and short commodities. Why would you drill down and grab that diversification, size it with your algorithm, follow that trend? It's not just daily diversification, it's also kind of profit diversification and uh, entry and exit diversification.
yeah, that's a big
And
one that I would look at.
you just
Yeah,
get more
um,
diversification choosing these equities, and you get the outlier possibility. Um, all these stocks that are in one big index, they're just going to, even the big movers, some of them you want to be long, some short, some flat. But even if you get some big movers in there, it it's going to be watered down by others. You're not going to get the big outlier like 400 or 500 ATRs like Tesla. And then all of these managed futures CTAs, they're all long. All these indices are pretty much long. I have shorts. You trade your single stocks short as well, correct?
yeah, oh yeah, yeah. I mean, so I have trade about 50 single stocks. I think about half a dozen of them are short. Um, and some have been really good. Like
Yeah,
some have been on there. I've been holding these for a while, and
right.
maybe they might rebound. And obviously, like all of our positions, we'll give some back at the end when they if and when they reverse. But even though the group, the indexes are going up, and there's stocks that people know that are going up, and they're focusing on that. So to them, it seems like, well, they're all going up. They're all going up. So why would you want to be short anything? Yeah, well,
Your
you're
market.
not you're not on the pulse of 5,000 names. I'm not either.
Yeah.
But some have been going down. You know, like
Right, right.
and like long short hedge funds. Equity hedge funds are long and short things all the time. A lot of times.
Yeah, but we have to be. It has to be in a downtrend for us, and there are going to be
Yes,
times
it's yes,
where
yes.
it's going to be hard to find shorts. It's going to be hard to find long. Um, but you have this constant fixed universe. You're trading them long and short, uh, and yeah, it's a beautiful thing. I mean, and then all last year we're short every bond future out there. No diversification. It's nice. We made money
Yep,
on all of them. They were big trends. But
sure.
you come in every day and you're like, March, you're like, I'm going to get my ass kicked in March because I got no longs, but I got to follow the trend. Same with
Yeah,
the dollar, long the dollar for 21, 20, 22, whatever. Uh, no, nothing short the dollar really. Well, we had a couple, Mexican peso, things like that. But it's not you're going to follow the trend primarily, but it's not like you're like agonizing. Like now, I feel really good about because I'm still short some currencies and I'm long some currencies, and so I feel better from a risk manager point of view. I'm just following the trades, following the trend, following the system, and I'm getting a pat on the back from my system saying, you know, you're really good job on diversification, Jer, because you're long and short currencies now. And double pat on the back for my stock selection because I'm long a bunch and I'm short a bunch. And you're like, well, what if we get a big up move and a big bull market? I'm like, well, we don't really think in terms like that. We're looking for this outlier. We may get a nice bull market, but we may get two or three stocks that go 200 ATRs. And that's what
yeah,
we're looking. And we like this idea of every day you come in, and if stocks are up, you make money. If they're down, you lose money. No, we have a balance, and this is what money managers, trend followers, professional money managers, risk managers. That's what they kind of want, and we're following the system. Let's don't ever forget that part. We're just passively following and being rewarded for seeking out and creating a portfolio of individual stocks that have different chart patterns. I like S&P going up. That's great. It's fantastic. So much else going on. It's just like looking at the dollar index and saying, the dollar's doing this. Well, the peso wasn't doing that. Good for
right.
you. You got the peso. Well, good for everyone. Let's all branch out and get away from these unsophisticated kindergarten approach to trading stupid indexes, which are not legitimate trading vehicles at all because of the lack of outliers. And some of
Yeah, it's
those
just
stocks you should
yeah,
be long, some short, some flat. I mean, you can't, no one can argue against that. No one ever has. I've been on so many podcasts and I've gone through this speech so many times. And uh, the comeback to all of this is, okay, the next question. Let's go to the next question. Yeah, fuck yeah, you got to go to the next question because you have no answer. CTAs trade futures. Don't ask me why. Not very imaginative, not very evolving. Ah,
well,
okay,
that's
keep
the
going.
issue. If you see yourself as a CTA, you're going to do one thing. You see yourself as a trend follower, you can do something else. And and
You-
you might have some things in common, but a trend follower just I believe, sees more opportunity in more places. They're not having the business side of things restrict them, and it's like, well, our clients don't want it. Okay, well, yeah, fine. Then you go to them. But I'm not interested in that. I'm not interested in doing, serving that, S&P 100 style, like that, those massive, massive only clients who want you to be a vanilla. They want you to be, well, are you a trend follower or not? Are you a CTA or not? You're managed futures or not? Because we gotta mark you down. We gotta put you down. We have to label you as this. So then when we go to our meetings, we say, yeah, we have one of those, because that's what you are. You know, like, look, I'm here to make money. I'm here to make a lot of money. And I'm here to do it better than some index can, and do it better than, some other hedge fund can. We're trying to make more with experiencing less pain. How's that? Very simple stuff. And in
Right.
order to do that,
Right.
here's a strategy for you. That index thing, yeah, we're gonna have to bail on that. We're gonna have to branch out and trade some single stocks. And like, are you cool with that? Like, because I know the individual investors I have, they're like, fuck yeah, I'm cool with it. Yeah, let's go. You know, we trust
Oh, of
you.
course. Of
You
course.
must have done it. But like, it's a
Oh,
whole
yeah.
different business, I think.
Oh, exactly. And this is the business side, and it's so sad for these captive CTAs in this stupid business managed futures. It's ridiculous. Yeah, you're trying to make the experience and the returns of trend following better. It gets so much criticism, with the drawdowns, and the return versus drawdown is superior to almost any kind of stock index and S&P, of course, but that never really gets talked about. When we'll accept an 8% return and over a 50% drawdown from equities,
Yep.
but not from managed futures, not something that would be maybe twice as good as that, an 8% return and a 20% drawdown, easily achievable by a long-term trend follower with lots of diversification. So you're trying to make
Yes.
it better for everybody, including yourself. They're just not interested in it. And I'll tell you why. And that is because it's so silly. I've been there. And that is if you say to them, okay, I want to trade the single stocks. I need an FCM account, which is already set up. I also need
Mm.
an account at IB to trade stocks. What? We do not know. We do not have the ability to give you this IB account. Our whole business structure cannot handle something that's better for clients. If y'all would get up about it and pull in the same direction and deny the need and the improvement that single stocks would give you, we'll be golden. And we don't. And then yeah, it's a sad thing. It's ridiculous that is. When I had my largest client ever, I asked them back in the '90s, can I trade single stocks? And they said no. You're a stock trader. You're a futures trader. And
Yeah,
then,
that's
5 years
it right
later, single stock futures came out, and I said, "Can I trade single stock futures?" And they said, "Sure, you're a futures trader."
there.
And
Yeah, it's
silly
it's
you
so
and me,
silly. It's,
we
it's so
have
silly.
we have the client and our own selfish. We place the client's needs and our own selfish desires to have better performance ahead of everything else, and we just don't want to get along. And but one of these days they will trade stocks, no doubt.
Oh yes,
It's
they're
inevitable. And a lot of CTAs, the Campbell guy who was on Niels's podcast, the CTA series, wonderful series, uh, his managed futures side of the business, like 25%, I think. Uh, no, no single stocks, just index futures. And then the other part of his business, though, he talked about um, monitoring and analyzing 5,000 equities.
ah
But
okay.
the two cannot meet. They must be kept separate and apart from each other.
Yeah, it's just business decision. That's all it is.
Yeah, it's business.
They're
Please go
serving the
along.
certain client who doesn't want it, and they want it to be sparsed, you know, broken out, two
What
separate products. Uh,
getting very, very negative here, but back in the day when I first started in late 80s, early 90s, we would get money from people who didn't even know us. They didn't even know us. What was starting was managed futures, and it became dominated by the large institutions, Merrill, Smith Barney, Morgan Stanley, Dean Witter, Prudential. But at one point, it was a lot of small multi-advisor CTA, CPO. CPO was the name, commodity pool organizer,
okay,
commodity pool operator. And
operator.
what they
Yep.
would do is they would just come to us and say, will you be a part of this fund? And we're like, sure. I
Okay.
mean, they were just trying to find anyone who would uh, take their money in a managed account, trade futures only, kind of a rip-off for their clients with the commissions and the fees. And we would get, we'd say, we want to get 2 and 20. They're like, sure, you can have 2 and 20, whatever you want, you can have. We'll put another 4 or 5 or 6 and take a slice of the interest income as well. And this is how managed futures began. And it's not too far different. Uh, and I think this sort of business model is what is perpetuated, is that no, we have a model, it's set up for futures, there's all kinds of little loopholes here. You're really causing us some issues with these single stocks. Even telling people that single stocks are better or great are going to help the performance. It's really not part of the marketing slogan, not part of the process we built up. It's got to be FCM only, managed account only, partially funded only. Or how else you expect us to make money? You know, can you repeat all that? I didn't hear anything about the client there. I didn't hear anything that
Right.
was best for the client. You probably said it, I just didn't hear it. No, I didn't say a damn thing about that. Yeah. So I'm very bitter about all of that and how clients get screwed and continue to get screwed by managed futures people. Don't like it. Needs to go away. It needs to go away. Andrew. Well, Andrew's trading a managed futures, replicated a managed futures fund. But anyways, so I guess he's not part of making it go away. But I guess
No.
I certainly am. I'm certainly helping try to draw a distinction between managed futures and the wonderful art of trend following.
Yes. Yeah, and I think back to the art of it, and because there's some confusion, there might be some cynicism or side eye. How are you guys selecting some of these things? Because all right, you said you select them not necessarily at random, but there's no clear there's no clear rules on it. It's like, okay, well, they got to meet certain requirements, let's say price and volume, market cap, or whatever. Okay, yada yada. But then you have, well, you want something different. What the heck is that? How do you measure that? Um, all right. Well, I remember when I first started, I had to choose. At least I went this route. I couldn't trade many markets, so I wanted to trade as many as I could, given the assets I had. So I remember just trading 11 markets. It was a few grains, a couple, one stock. I think the S&P mini. I think I traded a bond future, a few currencies, energy, oil, a mini or something like that. And so I said, all right, I got a decent enough um, coverage here on what I can do. I can't do everything, so I'm just gonna have to make this trade off. But I remember I remember selecting gold instead of silver. Whatever reason,
Mm,
I just chose it because at some point I just had to make a choice. And
right.
I remember silver went way up early in like I think it was maybe March or April of my first year. I'm sitting there with gold, and gold's like, okay, it's doing fine, but it wasn't silver. Silver was going to the moon, and uh, and then silver crashed, and then gold, picked up later. But I believe if I traded silver instead of gold, I would have made more money trading silver. I would have made more money on the overall. So, but then you could go down this like, okay, well, how do I have the best of both worlds? Do I watch them both and then I go with the stronger one? Like then it's more complex and it's more you're introducing a new set of things that can go wrong. I think, and
Oh,
and
sure.
I think this is kind of a thing for small accounts. Um,
Hmm.
when you get bigger, you can't be piling into cotton if you're a 100 $200 million fund and you're eschewing. cocoa and coffee and lumber and orange juice and sugar and all the the foreign versions of those markets as well, and be all in on cotton. Like it can't do it. It it's very dangerous. And so you're like, all right, well, yeah, okay. Now I got to spread it out a little bit. Too bad. This is the new norm I got to live with now. So I think with with us though, um, with these single names, yeah, I mean, I don't have a okay. I added say I don't know Chevron. All right, well, okay. Now take that Chevron into account for the stocks you already have. Does this Chevron uh, is it highly correlated with other things? Do you have any other energies? Is there any other oil exploration and gas companies? No? Okay, good. Now you can add it. If you say, well, you already have Exxon, you know, yeah, it's gonna, Chevron's gonna be, I'd assume, I don't know this offhand, but obviously their businesses are fucking identical, the exact same thing. Um, so is it a good idea to trade both? Like, probably not. You're double dipping. Probably not a great idea. So you can you know, and the let's say the data available does not does not show that it's 90% correlated. Say it was like 60. Like, all right, well, 60 is like not super high, but it's not very low. It's not low either. I'd say it's more correlated than it's not. But yeah, you know what? But it's still the same damn, you know, dynamics. It's the same industry, the same company. They're doing the same thing. They're trying to find oil. They try to give oil, process oil uh, and disperse it out so people can use it. Yeah. Okay. All right. You know what? All right. The number says it's not that big of a deal, but I'm saying it's a big deal. Like, all right, I'm not going to go with that one. Let's try to find some other wacky ones. So, like, I think there's some of that. There's some of this, like, artistry that's not fully coded. So, if you sent, you know, Mike and Jerry don't have a thing where I can send this in back in time and they would know exactly, based on these rules, I know exactly what they would pick back then. Like, no, no. I would give them some kind of loose guidelines, some, strict guidelines, and then some looser ones, and then they would come up with their own mix. But over the long run, if you're following it and you're sticking to that, you're not swapping things in and out every day, every week, every month, or something like that. I don't think it really matters. Uh, I, I've done this, you know, we've done this, tested a bunch of different things, tested a bunch of different mixes, 20 stock, 10 stock, 50 stock, 100 stock mixes, where some are the same, some are different, some are, it's all different. They're, five have only changed out. You, when you wrap it in a highly disciplined trend following strategy, you tend to get a very similar return. Um, but the months and the years will be different. And but over this long run, 30 plus years, 20, 30 plus years, you're arriving around the same place. And that's
Exactly.
what's so
That
like
was
it's so head scratching. It's like, how is that possible? Like, but this
well,
is
that's the
like the
point I wanted
magic
to
of this
make.
thing. Sorry, yeah.
Yeah, that's the point I wanted to make, and that is that Turtle 101, December 1983, all trend following trades have the same expectation. So over time, um, you're happy that on a daily basis, you're not just trading a couple markets or 15 or 20. And as you get more assets, you're very happy about this. Although, no matter how many assets you trade, no matter how much diversification you get, you're gonna, at the end of the day, have all of these trades over your entire career start converging onto the same expectation per trade. So all the trades make the same amount of money. The only thing you're getting from this diversification is some peace of mind on a daily, weekly, monthly basis, annual basis, spreading out these outliers, spreading out the good trades, the bad trades, the good days and bad days. So that's the ultimate, is that having a fixed universe is kind of the key, and not and taking all the trades, not doing some sort of relative strength thing. There's a bad way of doing relative strength. There may be a good way of doing it, but basically you got to look at it trade by trade, do all the trades, apply the system every day. Don't miss any trades. Don't take markets out of your portfolio. Put them back in later. Sometimes you have to take things out. You have no choice, and sometimes you have to. You want to put things in because your assets are expanding and you're getting more money. You can trade more markets. But that's the ultimate. Is that at the end of the day, diversification is just going to be a pleasant thing. It's going to make your life a bit more pleasant, and you're probably going to end up making about the same amount of money
Yeah,
with trading
and I
300
think it
markets or
is.
trading 50 markets.
Yeah, right. Yeah. And you got to do the best that you can with, say, the assets you're working with, and and your own, let's say, personal tolerance too. Like, do you want to have, like, when I first started, I don't have this tolerance anymore. Like, do I want to have? I traded 11 markets, trading about 6% risk per trade. You know, that's
Wow.
you know, but like that's what I needed to do. I know I wanted to be more aggressive, but that was also what I had to do to even get a one lot, on some of these markets. So it was either okay, you could trade less, you can risk less, but then you're going to be trading less markets. No, I don't want to do that. To give things more room, it's a whole calculus formula that you're working with to to see what you can do, and yeah, what you're comfortable with. And I was trying to give things as much room as I could and trade as many things as I could. So that was the risk uh, I had to use, at least the minimum. But I think the counterintuitive thing, maybe with trend following in general, and especially trading the stocks, is that you can. I think people still look at this as like how many how many markets you have on. Oh, you got a few winners, like, you know, or I'd say maybe with what was it working? I'm trying to think of some things that are, if it's like a mixed bag, like if someone's looking at the currencies and they're looking at, yeah, the charts look a little like, a lot of things going up, things going down. So you're probably not doing that well, right? Like, because I see a lot of things not really going really anywhere. Yeah, but these two are carrying the whole boat. And, say Brazil and Mexico, they're carrying the whole boat. Really? How is that possible? It's only two out of, like, and how many currencies do you trade? Like 20? Yeah. Well, how is that possible? Well, you remember the position sizing aspect of this style can really work wonders at times. And this is where it's, like, I think, counterintuitive. People can't understand, um, on a month to month, or year to year, like how the performance is being generated. I think it takes a lot of practice and a lot of daily screen time with it. Like, some of those aha moments of, like, oh, I see. Yeah, this is. Yeah, I remember you telling me you didn't need many things to work. All you need is a few things to work. Yeah, exactly. And this is where the single stock style comes in as well. Yeah, because if
Exactly.
we're relying on these stupid indexes, we're all kind of like in the same trade all the time. It's not great. And if it works out, okay, great. We got a huge position on Europe and Japan and America and whatever the hell else. It's all kind of doing the same thing, and that's all fine. But you know what? I'd rather having the option to where I'm not reliant on these clustered big moves altogether. I'd like a little bit more of the option, the freedom to have some things that work in other periods, other times, and some things that was, beaten up in the media for whatever, and Tesla's a great example. Just so many people hated it. Just they had some visceral reaction for it, or they loved it. They were part of the cult.
Right,
But
right,
that
exactly.
thing carried, you know, if you were in it, it, it it moved the needle, it moved the bottom line performance so much more than other things. It's like, well, yeah. Well, damn, how did you know that one? Well, I didn't. It kind of just worked out that way. And you know what? My position sizing took over. It really took over, and me just going with the winner took over. You know, and when you're selecting, you're going through the process of selecting and trying to find different wacky stuff. You're increasing your odds of something like that happening, but you're decreasing your odds of having this big collective position all at once. So where the S&P is up 20% this year because those handful of markets, whatever, in the indices that have really rallied after that bear market a couple of years ago, are doing much better than everything. It's like, yeah, okay, fine, but we did a lot better then in the stocks, even though they were going down. Like, we were doing better because we were on board those trends, or we were on board different uptrends that were working. Oh, really? Like, yeah, really. This is, I think, maybe part of the educational process where, like, it's we need like a better way of like marketing this stuff to get people to that. I I understand. I
Oh,
get it. I'm
it's
getting it
yeah,
more and more now. I'm getting it.
it's a whole education process because we're also so corrupted by what's been put into our heads our entire life about from Wall Street and how to look at stocks and the market, and the market is one of the worst
Yeah.
ignorant statements of all time because it's no such thing as the market. I trade 300 markets, 150 stocks. I was listening to Niels this weekend, and I think he was saying something like, I don't, maybe it was like a quoting me or got confused or something, but it said something like, I don't remember stocks being the best thing to trade. And I was like, oh, I say both. I say both. When I defend trend following and I defend diversified portfolio, currencies, commodities, and interest rates as well, I say, well, stocks are not the greatest trenders. They're not the best market. All markets are created equal. What we've already said, each individual market itself has the same expectation. Um, and so
Yeah.
let's trade these stocks. We only trade them, we only put them in the portfolio to the degree that they provide superior diversification. If there was 50 stocks, I would trade all 50, like I trade all 55 commodities that I can get my hands on. There's
Yeah.
a lot fewer for some people and a lot more for some other people. Uh, and I trade all the interest rates plus a few more that's hard to get at. I trade all the currencies, pretty much all the currencies and crosses. Probably a couple I don't trade for administrative reasons. But look, I can't trade 5,000 stocks. It's a different way of looking at things. It's not being handed to you on a silver platter. Here are the markets to trade. They're all futures. You have an FCM account, load them up, trade as many as you can based upon your liquidity and your account size. No, it's more work and it's harder. But look, don't treat the stock, don't discriminate against these wonderful markets in a way that you would never discriminate against currencies, commodities, and interest rates. It makes no sense.
I
So
yeah, I
yeah,
mean,
that's
yeah. I think back when you started, right, there were a lot less markets available, say like, 25 or 20, whatever it was, maybe
yeah,
less.
right.
So when new
Yeah,
things came on, now there's, a couple or 100 plus or whatever, across all the, foreign, including the foreign futures as well. You know, People saw it as, oh yeah, new one. I got a new one. Awesome. This is going to be something else. This is going to benefit us because it may not, 10 years, 20 years from now, it might be, that new one we added, we probably would have been better off if we didn't add it. Let's say like when cocoa became available. Cocoa has sucked, but you don't know it at the time, and you're allowing for it to contribute. You're allowing for it. I am open to it. So whether or not the stocks portion of my portfolio, perform the best, I don't know, but I'm open. Hey, if they want to, if they do their thing, I will allow them to. I'm not going to say you're not allowed to because my business won't allow it. No, I will allow you. So this is, um, I think again, like just some of the open-mindedness, the art form of, yeah, I'm used to using pastel. Like I can't go oil paint. Like I'm a pastel guy. You can make some pretty cool shit with some oil. Try it out. Okay. Some people, and I think people who do better, um, have more successes are going to try new things and allow for new things. Like, yeah, it's wacky. I'm not used to it yet, but I'm open to it. And I think just people are just like some of these people's businesses are just too good, and they're just fine. They're fine with how they thought, how they've been thinking for a while now, and um, changing things up might change their business, and that poses too big of a risk for them. And that's fine.
Do you
That's
do a
that's
back
opportunity
test?
for us. That's fine. Sorry.
Do you do a back test when you add a stock to make sure it made money in the past or see how it fits in with your current portfolio? I don't do that. I just add it. I
No,
add it for
no back
diversification
tests.
reasons. No
Yeah,
back test. Come
no
on. You're
back
going to
tests.
change your system when you add Dunkin' Donut? Man, I don't do that back. That's crazy. All right,
I mean, did people like
let's wrap it up.
when new futures came on board? Did you guys do back tests? You couldn't do it because there was no fucking data. So you guys just added it,
Yeah,
right?
at some point when you go from, I mean, we would add markets, futures markets, as they became available to the back test to see how well they did, and see how
Fine.
give us more information on the right systems to choose and how the systems worked in the past. But at this level, we've already said all the markets, from philosophically, trend following philosophy, all the markets have the same expectation. So all you need to really worry about is the diversification aspect. Is it going to, look, and one other thing you said earlier, should I trade Exxon and Chevron? Well, a lot of CTAs, the biggest ones in particular, they would probably have one opinion on that. Oh my God, so there you go. You don't, all stocks go up at the same time, they all go down at the same time. Not true. But they trade crude and Brent. Oh, well, that's different. It's a future. Yeah, that's the
Right.
whole point.
Yeah.
Everything's
Yeah.
different. Everything's different because it's a future. We
Yeah.
have to
It
have
is.
this incredibly two different ways of looking at things. It's not. It's just a market. We're trend following it. Has the same expectation, long and short. We're all here to put together the most diverse portfolio possible and to trade it for the rest of our life. Um, this fixed portfolio and take every single trade and see how it all works out. Okay, let's save something for next week.
Okay. Okay. I'm
I'm
uh,
going to
I'm
talk
starting
about.
to feel better. Now that me and Jerry, we've had some big projects going on. So and I have a 1-year-old, and it's just been tiring. I've been a little sluggish lately. I'm like, I don't know. Have you experienced this? Like, I've been tired. Like, I'm bumping into walls and shit. I'm like stubbing my toe, hitting my heels. I'm not like gauging the room and my angles right. And like, I was an athlete my entire life. Like, I know where everything is. My proprioception is amazing. Like, I know exactly where I am at all times. But I've just been tired, I think, and I've just been like overloaded in recent months, and I'm banging my fucking elbow on the wall. I'm like, what the fuck is this? Like, I gotta relax. I gotta go back to like sleeping better. I gotta rest more. Try to unplug a little bit more because the, the world. It's telling me slow down. You're gonna hit your head. But yeah, I don't know. I've been having that recently. It's weird.
Yeah.
And
Okay.
yeah, if people want
All
to
right.
like just pull up like as a side after they listen to this, like pull up the charts of the 2-year charts at least of Chevron and Exxon, the same goddamn thing. It's the same fucking chart. Like even if the correlation number says otherwise, just uh, write down the entries and exits using the same rules, and you'll be within probably about a week's 2 weeks time of comparing each entry and exit. That's another good practice, I think. If the correlation
However,
do that.
however,
Yeah.
however, however, you would agree that One of them can have a big outlier trend and the other one may not. And that's the
Sure.
appeal
Yes.
of,
Yes.
of trading crude and Brent and gold and silver, is that something can definitely happen. So even if you kind of screw up a bit and don't spend a lot of time like we do choosing stocks that have a less of a chance of being similar to other stocks and increased chance of having outliers, you're going to get some outliers. You're going to be surprised with, because it's different dynamics going on in every market in every, I mean, I've made a bunch of money this year in the London coffee and lost money in the other two coffees. And I made
Uh-huh.
a lot more money in London sugar than I did US sugar. So it has a different name on it. It's a different market. Although with stocks, you don't really have to be shoehorned into that idea so much. I wouldn't do that in stocks. I wouldn't trade Chevron and Exxon. But if I only had the opportunity to trade futures, hell yeah, I probably would trade crude and Brent
Yeah.
because that's all I got. And I've
Yeah.
limited myself. All right, I'm going to go and
Trade them
feed these
half the size.
birds.
Yeah.
I'm going to go trade these. I'm going to go feed these birds.
Okay.
This is a long episode. Oleg's
Is
going to
it?
love this. He's going to love it. Yeah, he's going to love it if you get it out there on YouTube anytime soon.
We're up to date on YouTube, but yeah. All
Oh,
right,
good.
Oleg. All
All
right,
right.
Oleg. It's here. It's coming today for you, but for you. No.
Oh,
I know
fantastic.
I've been sluggish earlier, but I'm on the ball now, so we're
All
good.
right.
All
Sounds
right.
good.
Until next week.
All right. Have a good week, Mike.
You too.